Hey everybody, it's me, the Einstein on Wall Street from the balcony at the New York Stock Exchange. We are on a roll here. We actually were able to pull my man Dan Ives off of a plane. He's got moments. He is under so much demand globally for his information, for his insights about what's going on, right? So I'm so happy you're here. Welcome,
awesome
welcome.
To see you,
Einstein and Ives. We are breaking barriers, saying it as it should be said. So let's talk. We just came off of, first of all, Happy New Year. You are the man.
Happy New Year to you too.
I'm so grateful the year we've had. It's been unbelievable. And 2024, an extraordinary year across everything, right? And you are the guy who literally, I can go back to the videotape like Warner Wolf from February and March of 2024. You said there'd be a 6 in front of the S&P. You said there'd be a 20,000 in front of the NASDAQ. You said that NVIDIA was going to, whatever bumps in the road, pebbles in your shoe that NVIDIA was going to suffer, and Apple were going to be just little sidebars. They were not going to be the sustaining factor in the stock, and you were right across the board. So I'm grateful for that, and I'm honored that I get to.
And vice versa.
Well, you know what? Look, I feel like I learned so much from you, and I'm so happy that we've gotten this wonderful platform
It's awesome.
to share and make it accessible and fun for everybody to hear what's going on. However, the last 2 weeks of the year, and we also know that the Santa Claus rally is by definition the last 5 trading days of the year and the first 2 trading days of the new year. And we do know that what ended up happening was at the last Fed meeting, right, they changed guidance going forward for 25 and 26 from 4 cuts to 2, and the market didn't like that. It got prickly, it got sticky, and we basically sold off 1,000 points. We were able to recoup a little bit, but my gut is it knocked the market off its beam from ascending and closing out the year at the high. And I think we went into sort of profit-taking mode. There are 2 factors that happen at the end of a year. In markets that have been sort of weakish, you see what's called window dressing, where the portfolio managers will mark their positions up because they're graded by their P&L on the last day of trading. When there are markets that have been really high, okay, people tend, if they're not going to close at the high, they tend to do some profit taking, and look, anybody who traded this market responsibly this year had profits to take. However, we are now in the first 10 days of 2025. We are now sort of suffering from bad news is good news because the economic data that came out on Friday was 244,000 new jobs were created, unemployment rate at 4.1. So, and the market is not acting that well. The last 2 weeks, I would say, a lot of stocks are 10, 15, 20% off their highs, right? Tech is getting a bit battered around. Tell me, what are your thoughts here?
I think it's the 10-year, right? I mean, as the 10-year moves toward that 5% threshold, it's the risk off. You're seeing that in tech stocks. I mean, I was at CES last week, sitting there front row with Jensen, and I think the view is that an unreal presentation, but maybe a lack of focus on some of the near-term things that some of the momentum traders were hoping for. You saw NVIDIA sell off, you see quantum sell off in terms of some of those words. Look, we've sat here for the last 12, 18 months, always talking about in these situations, you use it as opportunities to own your winners.
Right.
The 10-year going to 5% doesn't change our view of what tech stocks do this year. I think tech stocks are going to be up 20, 25% this year. And this is just one of those moments that you'll have as opportunities in the risk off.
Right.
And I think right now the bears are sort of dominating the narrative, the bond vigilantes in that risk off. But there's nothing fundamentally that's changed. I mean, to some extent, coming back from CES and a lot of our checks, we actually feel more incrementally bullish when it comes to autonomous robotics.
So tell me, what did you see there? How exciting was it?
I think a lot of times when you go to CES, it's like, let's say it was like drones.
CES is a conference of all the new innovations for the year and looking forward in guidance.
In Las Vegas.
Right,
really
right. So it's flashy.
It's fine, but a lot of times, like, those are things that can never go mass market. A talking refrigerator, drones.
The Jetsons were in town.
Now, autonomous. Robotics. We're talking about real use cases. That
in the near future.
In the near future. So my whole point is like Tesla Robotaxi Day, as we talked about in October, CES, this time even if you watch Jensen's speech and what he talks about, the revolution, we're actually going into the next stage. So my view in terms of tech, it's not just Mag 7, it's the second, third derivatives that it's going to spread to.
And those names are which? Microsoft, Google. Explain that to me.
But it's really about when you look at use cases, names like Salesforce.com.
Right. So that means that the products that NVIDIA are making, right, the AI that they're disseminating in data centers and all that, are utilized by Salesforce? So for the layperson,
sure.
Explain what that means.
Think about it like NVIDIA is like the foundation of a house.
Okay.
Software, almost the rooms, the decorations, the refrigerators, the kitchens.
Infrastructure of the house.
So as the infrastructure is getting built, that's really software.
Okay.
NVIDIA is the brains, the golden oil behind it.
Okay.
But it's software that's really the use case.
Okay.
So in 2025, I think software is really going to be a huge beneficiary. Why those install bases, Oracle, Adobe, Microsoft.
They're going to be using NVIDIA software, or NVIDIA is going to be using theirs.
They'll be using NVIDIA's chips, but enterprises will be deploying the use cases for a lot of these software.
Okay, so it's going to be, this is stage 2. This is the next inning that you were describing.
It's
You've been
stage
talking
2,
about.
stage 3.
Gotcha.
Autonomous, that's stage 2, stage 3. All that's playing out right now is that the stage is getting set.
Right.
And that's very bullish for where I think tech stocks go, especially in an environment where you're going to have a lot more M&A, deregulatory environment under Trump.
Which we talked about.
But we've always talked about you're going to have headline risks.
Right.
China tariffs, even some of these things Biden's doing with NVIDIA chips in the last few days. But
he's just vying. He's just posturing.
But as we've talked about, those are the opportunities to own these names.
Okay, so we're almost going through growing pains, because I know that people tend to catastrophize things, right? We went from a market that had 58 record highs, right, in 218 trading days in 2024. Every week, every month, every quarter, we were hitting record highs across the board, 58 record highs across every indices. People all got a bit jaded by the fact that today's a new high, yesterday's a new high, tomorrow's going to be a new high, all that kind of stuff. Now suddenly, people who have been fresh in 2024 have never seen what we're seeing in a very short period of time, a bit of a down market. The bears have come out of the closet, they put down their slushy, they put down their chips, and they're standing around, posturing. They're standing out on stage doing a little bit of a Bugs Bunny dance.
And to your point, the weak hands could get exposed in the market. It's like the weak hands, nervous investors could ultimately then sell stocks. You start to see some technicals hit.
Right.
You look like quantum names are down 50, 60%.
Let's talk about that. Sorry to interrupt you, because we know that Jensen, best of breed, NVIDIA, AI, all of that. We know that there was, over the last in fact, a very short period of time, I would say 6 weeks to 2 months, the quantum computing, and you need to explain to me what that means, sector has absolutely skyrocketed, parabolic. Stocks like Rigetti went from 2 to 20. A number of IONQ, a lot of these names just took off. My gut was that somebody had dropped the dime on the fact that there was a very tight relationship that was going to happen between NVIDIA and a lot of these quantum names. What ended up happening was, at the last speech that Jensen made, was, if you all think that we're going to have dinner together next week, you're mistaken. We're not having dinner for another 10 or 20 years. And that decimated the space.
And again, it's probably somewhere in between.
Right, okay.
But the point is, I do think quantum probably got over its skis.
Okay.
But we're going to go through these periods where that's still going to be a growth sector.
Right. What is quantum computing? Explain.
Look, when you think about quantum, it's really what I ultimately view as it's the next derivative of AI in terms of a lot of these models, a lot of the sort of derivatives of technology. Quantum is almost the next phase of
what can you tell me? What does it
technology
look like, actually?
Well, I think it's really.
We know with AI, a layperson, anybody knowing what AI is, it's just
the best way to think about it from a data perspective. If AI could do 20% of the things that we can do today, quantum at scale can maybe do 40%.
Oh, wow! So it's AI on steroids.
But the scale won't be there for another 5, 8, 10 years, and that's why our view is always you focus on the AI revolution.
Right.
Chips, software, infrastructure.
Right.
Quantum's going to be in there, but that's that's not your play. The play right now is what's in front
So
of us.
that's far off. So you've got AI, and then you've got second and third derivative, which is the software and the actual case usage of it, and the quantum thing we should put on the back burner. Not that anything bad happened. It was just that people were given a little bit of a butt of reality that this was not a relationship that was happening right away. It's in the works, but it's something that's going to marinate. It's like a good steak.
That's exactly the way to think
Okay.
about it.
I-
And I think in a risk-off environment with yields, bond market kind of dictating stuff, I also think a lot of investors are getting fearful. Like, oh, 2022. Remember 2022, like horrible year for stocks
Right.
but the important thing is Fed is still their next move, whenever that may be,
Right.
is a cut, not a hike.
You sure about that? That's your feeling.
And,
Okay.
and that
Even though they're dangling the raise,
we could talk about they're going to cut 50 bips instead of 100,
right?
but it's cutting, not hiking.
Okay, so
And
there.
I think it's just important to understand it's an accommodative easing.
Right.
It's the pace that will slow down.
Okay, so look, we know that everybody's sort of fallen in love with this need for thinking, not rationally, that we need more cuts. The bottom line is you don't expend a bullet from your gun unless it's necessary.
Yep.
When they cut from 4 interest rate cuts in 2025 guidance and 26 to 2, it was the reasoning behind it was the fact that the economy is doing better than we thought it is. So people are in this, they're not really thinking rationally, because net, you buy stocks because of earnings, because of guidance, because of forward views and how the economy is doing. If the economy is benefiting and stronger, unemployment